Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. What I want to do today is talk about semiconductor companies. The semiconductor companies are, in a way, they kind of very difficult to get your head around what they do and how it works and so on. So what I want to do is first talk about what they do and put them in different categories, and then I'm going to give you seven different companies that are in the semiconductor companies, and I own one out of the seven, and I'll share with you guys all that information in a bit. But before we do that, it takes genuinely a lot of time to put these videos together, so I would really appreciate if you can press that like button, because as I said, always genuinely it takes a lot of time. I've got a full-time job and a family, and I'm trying to keep up with this channel as well because it's growing, mashallah. So what I want to do is I want to make sure that I'm publishing a lot more, inshallah, in the next few weeks and so on. Also, if you can join us in the Patreon account, that would be absolutely amazing, where you can get access to all the buys and sells that I make on weekly basis. You get stock watch lists, you got the ETF trackers, you got the private Discord, you got fixed Sharia compliant investing ebook, and so on. If you can join us in that one, that would be absolutely wonderful. Now, let's talk about semiconductor companies. So semiconductor companies are in everything that we do these days. Okay, we're talking about chips that go into almost everything: computers, cars, home appliances, medical equipment, and so on, so on, so. And semiconductor companies will sell 600 billion worth of chips this year, and that's a lot. And these companies are almost everything we do. So if you drive in a car, if you have a computer, if you've got some sort of even your microwave that has got embedded systems and all of that stuff, every single thing we do has some sort of a technology in it, some sort of a chip that makes it work and it does what it's supposed to do. And these chips are getting smarter, smaller and smaller, and that's the competition. Now, what I'm going to show you now is the different categories these companies fall into. So we've got the equipment companies, so the companies that supply the equipment. So ASML is one of those companies. They have the equipment that is actually needed in order to put these chips together. You've got the Lam Research, you've got Applied Materials. So these companies are the supply equipment and material companies. Then you've got the foundries, manufacturers. You got TSMC, which is the biggest one out there. You also got Global Foundries, UMC, and SMIC as well. Now, within that, Samsung and Intel are also doing that, the IDMs. So the IDMs is integrated device manufacturers. So they fall into that category. So Intel is now putting a lot more money. So the US is trying now to put a lot more money because of course, the TSMC is owned by Taiwan Semiconductor Company. So it's owned in Taiwan. So what they're trying to do is create their own kind of thing. So they're helping Intel. I think they've given them about $20 billion to build their own manufacturing. So that's going to take another 10 years or so. Well, I don't know, 5 years, 10 years from now and so on. Then we've got the fabless companies, so the designers. The Nvidias, for example, AMDs, Qualcomms, Broadcoms, all of these companies, even Apple, even Amazon, for example, they have got their own Teslas and so on. So all of these companies are designers, but through these four here, they only design it for their own devices. They're still not fully dependent on just their devices, basically on their own chips. They're still using other devices from Qualcomm, for example, Apple, and so on. But the three here are the main ones. Okay, so, and also Broadcom and a couple of other companies out there. Then you've got the tools, the IP providers, the software companies, the ARM company, for example, Synopsys, for example, Cadence. All of these three companies here are the software companies. So when these companies want to design their own, they go to these companies and to use their software to design it. Then TSMC, for example, makes it for them. And the equipment that's used to create this whole thing comes from ASML mainly, and Lam Research and Applied Materials also helped in that sense. So I hope that kind of gives you an idea of how these companies are categorized. So they are completely doing different things, but they also need each other. So without TSMC, none of these things will be happening. Without ASML and their two main equipments, none of this will be happening. So they kind of need each other. Samsung is actually getting bigger in terms of basically manufacturing side of things. Intel is now putting a lot more money, like I said earlier. And this company as well, Qualcomm, AMD, and Nvidia, and Broadcoms, and so on. So Qualcomm and Broadcom kind of to networking side of things in terms of the connections. That's what they do. So there's a 5Gs and all of that stuff. The AMDs, of course, they do a lot of the personal computers and so on, and Nvidia, the GPUs and so on. So there's a lot more companies that are not into this category right now, but I hope this kind of gives you an idea of the categories that we're looking at when it comes to semiconductor companies. What I'm going to do now is I'm going to pick 7 different companies within this environment here, okay, and share that with you about their information, of course, their financial details side of things, give you overview, and it's up to you if you want to invest in them, if you don't want to invest in them. One of the things I'm going to say before we move on from here is these companies depend on how the economy is doing. So their financials depends on if the economy is booming. So if everyone's going out there buying the new best, the best new fridges and all of that stuff, because we have so much access money and so on, right? These companies will start producing more of this equipment, and that's how they make their money. If we're in a recession and we're not buying the latest phones, we're not buying the latest fridges, we're not buying the latest appliances and all of that stuff, okay, the latest cars and whatever, then of course these companies will have their economy, basically their revenue will slow down. So it's very cyclical business, so you have to bear that in mind. So when you look in this company to invest in these companies, you're not going to invest it just because they're going to go up 20% this year. You have to take into consideration for the next 5 years, 10 years. Right, now I'm going to share with you guys the 7 companies that I want to talk about today, and basically I'm going to look at their return on invested capital, okay, and total return in the last 10 years. So the total return in the last 10 years will give us an idea of where these companies, basically how much these companies have actually given back to their shareholders, and return on invested capital basically will give us an idea of the money that we invested in, what the company is doing with the money that we invested in, okay, and it kind of helps with the profitability and the performance of the company. So what basically measures the percentage return that the company earns on the invested capital. So the ratio shows how efficiently a company is using the investors' money, okay, to generate more income, if you like. So that's basically quite important for us as investors. The rest of the stuff here is more or less exactly what we used to have. So first company we're looking at is ASML. Like I said, ASML is one of the companies that is genuinely needed in this world. And also, by the way, before I move on from here, I just remember one more thing. With the China situation, a lot of these companies have been told they cannot sell their main product to China. Now, ASML still sells products to China, but they're not selling the latest technologies, if you like. So you have to bear that in mind with the situation with China and the US right now. Any companies that operate in the US have been told you cannot do this, you cannot do that. So until that's cleared out, I don't know what's going to happen. I'm sure China is also developing their own technologies, but they need technology, basically the devices ASML creates. So right now they're not getting the best, but only, we'll see what happens with that. So that's another risk that could potentially happen to these companies, because China actually buys a lot of their products. So currently they have 290 billion market cap. They have a wide economic moat, $757 per share is where the price is at. Dividend is almost non-existent, but they are actually increasing every year, which is quite nice. About 6% in the 33% in the last 10 years, 6% recently, 13 years of increase in that dividend. You get $6.11. Safety is 82%, profit margin 28%, return on equity is absolutely amazing, 79%, and return on invested capital of 50%, which is really good. $6 billion right now of free cash flow, 25% in terms of total return in the last 10 years, which is absolutely huge. That means per annum, this is what you would have got. Basically, the growth estimate for the next year is 1%, and then after that, every year they're expecting about 24% in terms of that, in terms of the growth side of things. Earnings, in terms of valuation, we're looking at Morningstar saying right now it's fairly valued. 750 is where the price should be. Right now it's 757. Now, if we look at the earnings expectations for moving forward, so 2023, I think they've got one more quarter to report, 37% growth. 2024 is actually flat, and 2025 and 2026 is actually good double digits again, 37%, almost 38%, 22%, 21%, and so on so in the next few years. The next company we're looking at today is TSMC. That's again, we've talked about this company, $483 billion right now of market cap. Moat is a wide price, $114 per share. They reported their earnings, I think it was yesterday. For that reason, a lot of the semiconductor companies gone up quite a bit. I think they're up a lot today as well, again, because maybe because of the effect of TSMC. We will see. Dividends right now almost 2%, payout ratio 34%. Latest increase was 17%. 5-year growth rate 7%. They're not increasing every single year, so they don't bother increasing that. I'm not even bothered with the dividend with this sort of a company. Annual payout right now is $2.19. Safety 62%, profit margin 38%, return on equity 30%, return on invested capital about 23%, which is quite nice. Free cash flow $6.7 right now, and total return in the last 10 years is 22%. Growth estimate next year 18%, then 4% after that. 27% discount right now. $139 per share is where they think the price should be. Looking at the growth estimate, the EPS expectations, 20% in 2024, 25% the following year. Again, in terms of revenue side of it, 23%, 18%, 11%. So again, absolutely amazing. There's nothing wrong with that side of things. Next one is Lam Research. Again, another one of the equipment companies. $104 billion right now. Wide economic mode, $820 per share right now. Dividend yield of just about 1%. Payout ratio 24%. Latest increase was 16%. The 5-year growth rate of 22% and 9 years of increase in that dividend. You get $8 for every share of this company that you own. 66% safety. Profit margin 25%. Return on invested capital 51%. Return on on equity 51%, and 36% of return on invested capital. Free cash flow right now $4.5 billion. Total return in the last 10 years we're looking at about 31%, which is absolutely huge. Growth estimate 26% for this year, then about 8% after that. Fairly valued right now, $660 per share is where they think the price should be. Right now is 820. That's very, you know what, I'm gonna double check this because, okay, let me check this because I'm not sure if that's the case. Okay, fairly valued of, okay, $660 per share, and right now we're looking about, it's gone up actually, wow, it's gone about 4% today. That's probably why. Okay, that makes sense. So that might change slightly, but we will see. So next company, before we actually look at the next company, I'm going to show you where this company is at in terms of earnings. 2024, they're expecting the earnings to decline about 18%, then 25%, then 23%, 18% for the following year. This might give us an opportunity. It might come down, but right now it's going up. It doesn't look like it's going to come down anytime soon. Right, the next company on the fourth company is one of the equipment companies, KLA Corporation. This is one of the companies I used to own before. $80 billion market cap right now. White economic mode, $612 per share right now. I think I sold it half when it was about 300 something. Dividend yield, I should have. This is one of the companies actually I shouldn't have sold it, but I did it in 2020 when the stock market, when the technology companies were actually going down a lot, and I had about 30 something % of my portfolio was technology companies. So I sold this one, and I think it was MasterCard, the other one that I sold. Anyway, dividend is just less than 1% right now. Payout ratio 22%. Again, one of the reasons I've sold it because you sometimes have to do, you know, your rebalancing your portfolio and so on. So that's one of the reasons I sold it. There was nothing wrong with the company at all at the time. So latest increase was 12%, 5-year growth rate of 16%, dividend streak of 13 years. Annual payout $5.80, safety 71%, profit margin 30%, return on equity 121%, return on invested capital, return on equity was 121, and return on equity 40%, which is absolutely amazing. Free cash flow right now over $3 billion, 26% total return in the last 10 years, 13% expected to grow about the earnings about 13%, then about 6%. Fairly valued right now, $510 per share is where they think the price should be. And in terms of earnings expectations, we're looking about in 2024 decline of 7%, then 12%, then 18% the following year, and then 19% the following year. Next one is Applied Material, another one of the equipment companies, $133 billion of market cap. It has a wide economic moat, $166 per share right now. Dividend yield of just less than 1%. Payout ratio of 15%. Latest increase was 23%. The 5-year growth rate of 12%, which is quite nice. Dividend streak of 6 years. Annual payout $1.28. Safety 86%. 25% in terms of profit margin. Return on equity 48%, and return on invested capital 34%, which is absolutely huge. $7.5 billion of free cash flow right now. Total return the last 10 years 25%, 17%. Expected to grow at the earnings about 17%, then 15% after that. Fairly valued right now, $152 per share is where they think the price should be. And looking at the earnings estimates, we're looking about 2024 about minus 4%, then 16%, then 14% or 15%, then 16%, and so on. Now, the next company that we're looking at is one of the software companies, Synopsys, and this company has a market cap of $75 billion. It has a narrow economic moat, $509 per share right now. They don't have any dividends at all. Profit margin 21%, return on equity 21%, and looking at return on invested capital of 20%, which is absolutely fine. $1.5 billion, 28% in terms of total return in the last 10 years, 16% growth estimate for the next year, then 18% every year after that. Fairly valued right now, $480 per share. And looking at the estimate for the next year, 20% this year, 15%, then 22%, and so on, which is actually again quite big. Now, the final company we're looking at is Cadence Design, which is basically again another software company, very similar to this one. $75 billion in terms of market cap, narrow economic moat, $289 per share. They don't have any dividends yet. Profit margin 24%, return on equity of 32%, return on invested capital of 31%, $1.2 billion free cash flow right now. Total return in the last 10 years, we're looking at about 34%, 15% expected next year in terms of earnings growth, 18% after that, 26% premium right now, $209 per share is where they think the price should be. And looking at earnings estimates, we're looking about almost 20% in 2023. So they got one more quarter, I think, to report, and then 15% after that, 15% after that, and then 18%, and then 18% after that. So in terms of earnings expectations, they're expecting really great things about the company, but it seems very much overvalued right now. So I'll tell you, these companies are all great companies. I mean, all of them are, in terms of their revenue growth, in terms of everything else that they do, is absolutely amazing. And I genuinely mean that, because I really like the semiconductor companies, but like I said earlier, it's a very cyclical businesses. The only one that I own in this list is ASML. I used to have KLA previously. Like I said, I only sold it because I had to rebalance the portfolio. I would love to buy it back if it actually comes down quite a bit, but yeah, I'm not interested in this. Lam Research, actually, I just need to do a little bit more digging about this company. I mean, it seems very, very interesting. So those two companies are probably, I can see myself owning it again, KLA and possibly Lam Research in the future. I can't buy this. This one would have been easy buy for me. I mean, I used to own it in the free trade account, but I've sold it because it wasn't, I can't buy in an ISA account. So I don't really want, I don't want to buy anything outside my ISA account. But right now, I'm just going to leave this one alone. I'm going to keep adding to ASML as much as I can. The other three, I'm not really interested. I'll probably do a bit more digging about the software side of things and see how these companies tell what they can provide and so on. But yeah, that's the 7 companies I want to share with you guys. I'm going to show you in terms of Sharia compliance side of things according to Zoya. You can pause the video, but there's no issues with any of these companies. This is one of the other thing I like about these companies. In terms of debt levels, there's almost non-existent. Okay, so if you have a look at that, there's almost not much in terms of debt, in terms of business side of things. So everything seems absolutely fine and no issues. So one final thing I want to talk about here, and this is, there are a couple of ETFs that basically have these companies in them. Some people say, I've looked at it before, this SMH, and right now they're not Sharia compliant ETFs. Okay, and the reason I would stay away from them is because anything can happen, anything can easily change. So if I go to the holdings, for example, and I look at the individual companies, okay, where is the individual companies? Somewhere at the bottom here. Yeah, so this one for these companies, look, they've got Broadcom, they got Nvidia, and then you've got Intel here. Intel is not Sharia compliant right now, but of course, if you look at it, the revenue side of the things, and you look at in terms of 24 or 36, use the 36 months in terms of their doing their calculations for the market cap, then you're absolutely fine. But I just feel like it's a bit risky to invest in anything like this because anything can happen. They can add a company that's completely not Sharia compliant and so on. And they also have Nvidia, which I'm not really happy with right now, especially with what they're doing with basically this Israel and all of that stuff. So again, I would not be investing in this specifically right now, Nvidia, although Nvidia is in it everywhere. And not because of Nvidia, but the fact that they're not Sharia compliant, they're not going to look out for Sharia compliant companies. But yeah, so a lot of them, of course, are Sharia compliant individual companies. But again, that can easily change. They can add something else. So I just want to say, you know what? Just stay away from maybe just investing in this ETF as such, because anything can happen. But if you feel like, you know what, you're going to keep an eye on it, you're going to do your own research, inshallah, then of course, by any means, do what you need to do, inshallah. Anyway, have a wonderful day. Assalamu Alaikum.